Hello everyone! The big story today is that millions of Americans are absolutely furious after learning that the ACA, Affordable Care Act, which has governed the individual health insurance marketplace, has just had their major premium tax credits expire at the end of 2025. Many people thought that Obamacare was something different, but it isn't. Obamacare is just a nickname for the Affordable Care Act, the same law that created the health insurance marketplace where millions of Americans buy coverage. And now, after 5 years of extra subsidies, that additional financial support is gone. So in today's video, we'll cover what the ACA/Obamacare really is, why enhanced subsidies expired, how that affects your premiums, your coverage, and your wallet in 2026, and what options and alternatives exist now that costs are going up. So if you or someone that you know uses healthcare.gov or the marketplace, stick around because this matters to you. So first, let me make something abundantly clear, which is that the ACA and Obamacare are the same thing. The ACA is a federal law passed in 2010 to reform the U.S. health insurance system. It created the health insurance marketplaces, or exchanges, like healthcare.gov, where individuals and families who don't have employer coverage can buy health insurance. It also expanded Medicaid in many states and prohibited insurers from denying coverage due to pre-existing conditions. So when people say Obamacare, it's just the nickname that was given to the ACA because it was implemented under President Obama. But it is in actuality the same thing. Now, this actually causes problems for some unsurprising reasons. Yes, we live in a politically divisive time. We try not to get too political on this channel, but healthcare and politics are inextricably linked. So for those who supported President Obama, many supported Obamacare. However, for many who opposed President Obama, many of them opposed Obamacare even if they actually favored the Affordable Care Act. And although the terms were used synonymously, many people were actually unaware that it's the same thing. So there are people who feel that they support the Affordable Care Act, but don't support Obamacare. And this is very important to understand, because if you are someone who supports the Affordable Care Act, but you hear politicians discussing changes to Obamacare, it's important that you understand that they're actually talking about the ACA. Another common point of confusion is people hear that the ACA or Obamacare is ending at the end of 2025, and that's not true. Also, those premium tax credits are not totally gone. It's just that the enhanced premium tax credits made available under the Inflation Reduction Act and American Rescue Plan Act, which we've enjoyed for the past 5 years, have expired. The initial premium tax credits put into place by the Affordable Care Act are still available. In 2021, during the pandemic, Congress passed the American Rescue Plan Act. This law expanded the premium tax credits in 2 important ways. It increased the subsidy amount so that many people paid very little, or possibly even $0 in monthly premiums, and it removed the income eligibility cap. So middle-income families who previously didn't qualify because of their income became eligible. Then in 2022, the Inflation Reduction Act extended those enhanced premium tax credits through the end of 2025. But as of the recording of this video in 2026, those enhanced premium tax credits have expired. So what does this mean? Well, first of all, people are upset because this has affected Americans in 2 very important ways: their healthcare and their pocketbook. Yes, that's right. Analysis shows that net premiums, what people actually pay after subsidies, are projected to increase significantly in 2026. We've seen that already. Many insurers have already filed rate increases in anticipation of lower enrollment because subsidies expired. The Kaiser Family Foundation has reported that net premiums could more than double next year without expanded tax credits, and we're seeing increases of up to 75%. In practical terms, that means that people who have been paying possibly $0 per month for the past couple of years may now have to pay hundreds of dollars per month. And quite frankly, this is not financially feasible. And as I mentioned, insurers are increasing their rates not only as a result of changes in the healthcare sphere, but in anticipation of lower enrollment, which we've also already seen. And it really is a vicious cycle. Lower enrollment means a shrinking healthcare pool. Generally speaking, this is going to be people that have more significant medical needs, which means higher costs passed on to the insurance carriers, and then they hike up those rates again, further shrinking the enrollment pool. And it goes on and on and on. According to the analysis from the Congressional Budget Office and other research organizations, if these subsidies are not extended, and so far they haven't been, millions of Americans will likely drop their marketplace coverage entirely because they simply can't afford it. Estimates suggest roughly 4 million people may lose coverage or become uninsured. Sadly, this will likely reduce much of the progress that's been made over the past decade. And many people are upset, and rightfully so. This is affecting Americans in more than one way. First, there is that confusion over Obamacare and ACA. Now that's fine, they're technically the same thing, but a lot of people didn't realize that the temporary pandemic subsidy enhancements under those two laws were not permanent. Now it's important to understand that the ACA itself did not entirely disappear when these enhanced premium subsidies did. So what is still in place and what's still in effect? As I said, the ACA is still the law of the land. The marketplaces, healthcare.gov, and state exchanges are still open, and people can still buy insurance and qualify for some subsidies, just not the enhanced ones. And there is still a possibility that these enhanced subsidies may return. In fact, recently, the House passed legislation intending to expand these premium subsidies for a period of up to 3 years. But it still faces some legislative difficulties, and we'll make sure to keep you posted. Now that being said, we do release these videos on a weekly basis, so please make sure to subscribe to stay up to date. And of course, make sure to like this video so we can get this information out there. If you have any questions or concerns, you can reach us in the comments below or at the number on the screen. We're licensed health insurance brokers. We're licensed nationwide, and there's absolutely no charge for our services. So please feel free to reach out if you need any assistance. All right, let's get back to it. So if you're worried about those rising costs in 2026, there are some steps that you can take. Compare plans carefully. Despite these changes, one thing hasn't changed. You need to pick the best possible plan for your needs. Look not only at the monthly premium, but the deductibles, copays and coinsurance, out-of-pocket maximum, benefits offered, networks, to make sure that you're really getting the best bang for your buck. Use tax advantage savings. A good change is that HSAs are now more widely available with bronze plans and catastrophic coverage plans. Contributing to an HSA will lower your taxable income, therefore lowering your MAGI. This is what the marketplace looks at to determine your eligibility for those premium tax credits. So by contributing to an HSA, you may lower your taxable income to the point where you're eligible for a much, much larger premium tax credit, making those monthly premiums much more comfortable. Also, consider alternatives. Look into DPC, which is direct primary care, catastrophic coverage plans, short-term medical plans, lump sum payout plans like catastrophic coverage plans or critical illness plans. I've got a video that goes more in depth that I will link it at the end of today's video, because the truth of the matter is, at the end of the day, despite doing everything you possibly can, a marketplace plan may just be not financially feasible this year after experiencing those enhanced premium subsidies for the past 5 years. So check out alternatives to see if there's a better option for you. Remember, Obamacare and ACA are the same. Enhanced premium tax credits expired at the end of 2025, but the initial premium tax credits put into place by the ACA are still available. You may see your premiums increase, and if that's the case, you may want to look into alternatives to make things more affordable. If you need help navigating your options this year, please feel free to reach out to us in the comments below or at the number on the screen. As I said, we're licensed health insurance brokers, we're licensed nationwide, and there's no charge for our services. Here's that video I mentioned just a few moments ago, as well as our All About Marketplace playlist. And of course, please make sure to like and subscribe. We'll see you next time.